This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness. With the people, products, and technology to take you there, it's why they say, at PennyMac, greatness lives here.
Welcome to The Interest. I'm Christine Stewart. Economists are raising the chances of a U.S. recession within the next 12 months, worried that interest rate increases to tame inflation will weigh on growth. And according to the MBA, homebuyers seem to be getting cold feet. New home sales in June were down 12% from a year ago, continuing a sharp drop since late 2021. New home sales did rebound in May, but fell back to an annual pace of 620,000 in June, according to the MBA's Builder Application Survey. New home sales peaked at a yearly pace of 905,000 last November, but have dropped in 6 of the 7 months since. Higher mortgage rates and heightened economic uncertainty cooled borrower demand in June, leading to new home purchase applications declining to the lowest level since April 2020. Home price growth is slowing, but appreciation is still well above where it was a year ago. And as that prices some buyers out of the market, others are taking advantage of the lack of competition. Buyers who remain in the market are increasingly taking their time to make decisions or even waiting for price cuts. That's a big change from where we were just a few months ago, where buyers were rushing to offer way over asking price in a highly competitive environment. Those who can weather the storm of rising costs are having an otherwise less stressful buying experience compared to the pandemic-fueled rush on real estate in 2021. Still, we haven't seen the market completely flip in favor of buyers. Annual appreciation is down from April's peak, but according to Zillow, prices still grew at just under 20% in June. The typical home price right now is roughly $350,000 nationwide. And coupled with higher interest rates, the typical monthly mortgage for a new loan is 75% higher than one that closed just before the pandemic. We are seeing signs that the market will continue to cool. Inventory is still well below where it was in 2019, but the annual deficit has fallen from 30% in January to just 9% in June. And values actually dipped in some of the country's most expensive metros, including San Jose, Seattle, San Francisco, and San Diego. And finally, a federal judge upheld 4 convictions, including 2 people affiliated with the Lucchese crime family, stemming from a plot to embezzle funds from a Texas mortgage company. In a scheme that sounds like it's right out of Goodfellas, the 4 were found guilty in 2014 of taking over First Plus Financial Group and draining the company of over $14 million. The 4 convictions included a member and an associate of the Lucchese crime family, as well as 2 Texas brothers. The 4 men claim their actions were just normal, run-of-the-mill business, and court filings say they did initially try to invest in the company legitimately. The 4 men eventually came into contact with a disgruntled former employee who was willing to make false allegations against the company, including CEO Dan Phillips. An appellate court judge noted the threats worked. The FBI said it learned about the scheme as it was investigating one of the mobsters' attempts to take over the Lucchese's Philadelphia operation. In their consolidated appeal, the 4 defendants disputed every aspect of the case, including the investigation, charges, evidence, and jail sentences. But the 3-judge panel affirmed the convictions, including participating in racketeering, and the prison sentences that ranged from 10 to 30 years.
This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness.
For more on these and all of today's top stories, go to mortgagenewsnetwork.com.